Welcome to the October 27th, 2025 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. It is Halloween week, so I decided to do 5 scary dangers as we go through the market. Well, one scary danger is we're hitting all-time new highs, and there are some elements of the market that are overpriced. I'll cover one example. You've got rampant speculation. Now, one scary danger, now that the Dow has essentially ascended to 47,200 and something at the high point, up about 12% for the year. S&P's up about 15%. But the scary danger is with AI mania and the rampant speculation. Everybody's saying, is this 1999 all over again? That's a pretty scary danger. I'll tell you when this could come to an end when we get to 2 issues. And one is, where's all the money for the data centers going to come from? And the other is, where's the power going to come from? And we'll talk a little bit about that too, because they say there's going to be brownouts, and that's a scary danger for electricity, but they're finding solutions on that issue. Why did this week lead to a new high in the Dow? Right? Inflation comes in at 3% year over year. And I don't know, Bureau of Labor Statistics, they came out with their data, but everybody else is saying, well, we don't have any data because the government shut down, but they still came out with the data. So I'm not sure how they did that with the government shut down. Earnings growth. This is one of the reasons. 15% earnings growth over last year. And that is with about 1/3 of the S&P 500 companies reporting so far. That is strong. And it's expected to continue near that level for the rest of 2025. That'd be fourth quarter earnings in January and into the third quarter of 2026. That's what you're beginning to price in. AI mania is creating more productivity, and that does drive profits. And much like the 90s, it tends to go further. Now, there's $400 billion in data centers planned for this year, $600 billion investment next year. Nobody knows where OpenAI is going to get that much money. It's not all OpenAI, but that's one of the questions. And one of the scary dangers is that all this money is being spent, and are they really going to make money on AI agent subscriptions? Well, they're getting revenue, but is it going to be profitable enough? And by middle of next year, we're going to have some visibility on how long the data center build out is going to last. In the meantime, this is why you want to subscribe. Last week, we covered who's getting checks and who's writing checks. It's better to get checks. As a financial planner, I know that, right? Getting checks is better than writing checks because it leads to surplus cash flow. Wow. By the way, I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. This is proof that we love our clients. The team that cares, a team of 10 serving affluent families right from the Crescent in Dallas. All right. This is the top 10, bottom 10 for the last 90 days. Who's winning? Micron Technology woke up. Why? They're getting checks to build the data centers. There we go. Western Digital, similar. Intel finally has demonstrated that they may finally have a turnaround after years of punishing shareholders. Corning and Advanced Micro, Seagate, you can see who's running. This is clearly not over yet. Dallas-based Lennox International, actually Richardson, Texas-based, surprised me, down 26%. You got a little stall in the housing market and the construction market, but Lennox surprised me on the bottom 10 here. Charter Communications, no surprise. FactSet Research, down 31%. Notable. This is year to date. Now, Robinhood, we did the PE ratios on these top performers. They are ridiculously high. That's a scary danger, right? when you overpay for a company, you pay 200 times earnings, that's only a 0.5% earnings yield. They got to grow really fast to justify that price. And that is an example when you look at a Palantir. But Robinhood markets 276%. Part of that is their expertise in Bitcoin trading and other things like that. There's Western Digital, Seagate, Micron, Palantir, and their trailing 12-month PE ratio, according to Stephen Norris, who does all our Bloomberg charts, 600 times trailing 12-month earnings. Wow, that's got to grow really fast to justify that price. Advanced Micro, 106%. They woke up. I don't know why UGG maker Deckers Outdoors, whoa, they had a 14% gain in profits, but this is another scary danger. They're down 57% for the year. They were down 12% on Friday. What's the deal? The UGGs, all the girls love those things and buy them and overpay for them. Well, they had a 14% earnings growth and they just smacked it. So the question may be, when is something not good enough? Even earnings growth was not good enough to support Deckers Outdoors. That's another scary danger. All right. This is Oklo, and this is a to not to, a warning. They are worth $20 billion. Right here, they were worth $30 billion. Guess how much in sales they have? Zero. Guess how many regulatory approvals they have to make nuclear reactors? Zero. As a matter of fact, the NRC said their stuff catches fire. Well, that's not good. All right, that's a danger. If you run in a nuclear plant, you got to keep it cool, I hear. Anyway, they have no sales, no regulatory approval, no contracts. They have a project up in Idaho, and they're worth $20 billion. That's a scary danger. And you can find pockets like that in the market of just rampant speculation, and that usually doesn't end well. Nuclear takes a while. For example, Oklo hopes to be generating power by 2027 after years of losing money. Well, what is the real solution? There are two articles, and if you go to networthradio.com, you could see this week's program, and we've got reference to two articles in there. San Antonio data center, OpenAI is using that to launch their new Atlas browser. Wow, great story for Texas. What else is good for Texas on the data center build out? Who's getting checks? Natural gas. How does natural gas get there? It goes through a pipeline. Wow, that's a big beneficiary because data center demand could triple over the next decade, and natural gas is a natural choice. That's why you have Stargate out in West Texas. What are they doing there? Huge data center. It's more of a data city. Wow. And they just poke the hole in the ground, make sure the pipeline's connected, and they drop natural gas turbines. Big shortage of natural gas turbines to generate power. That's wave one of data center power demand, and natural gas is going to play a key part in the solution. All right, Texas Instruments. What happens when earnings are not good enough? Texas Instruments demonstrated a turnaround, hit 221. Now they're 170. They got really smacked down this week on what was a disappointing earnings report, and that's one of the dangers in this market. You've really got to look at, hey, the market's really thin. You've got maybe 20 technology leaders leading, much like 1999. But what's the solution? Well, it's called deep value. That is big dividend companies at a favorable price where the earnings right now are enough to generate a good forward return with a good dividend. What's the other solution? Global high yield is a great place to get an 8% yield right now. Floating rate loan funds do that. And that forward return could actually beat the indexes if they stall for a while, and it gives you cash flow while you're there. Thank you for tuning in. We look forward to having you back next week. We'll be busy all week long generating the charts and the graphs and the material to help you make great profits in the year ahead. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.